CEO Arden Whitmore looked at Mason Reed's worn jacket, then slid the loan application back across the polished desk. He was $200 short on a used sedan, nothing more than a car to drive his daughter to school. But Arden told him, in front of her staff and two other customers close enough to hear, that Whitmore Crown did not finance people who were almost certain to default. Mason left without raising his voice. 3 hours later, he came back, not to argue, not to beg, but with a fleet contract for his company. When $18 million appeared on her screen, Arden finally understood exactly who she had just turned away. If you love watching arrogant people face exactly the consequences they earned, hit subscribe to this channel and stay for the next story. The morning that changed everything for Mason Reed began with a sound he had been dreading for months. The grinding churn of a transmission giving up for the last time. He was parked outside Riverside Elementary, engine still running with a noise that drew glances from parents passing on the sidewalk, when the station wagon finally died with a shudder that traveled through the steering wheel and into his palms. The car had belonged to his wife, Natalie, and after she passed he had kept it running through 2 transmission repairs, a cracked radiator, and a set of tires that cost more than the car was worth. The mechanic he called that morning gave him the news in 3 sentences. The gearbox was finished, the repair estimate exceeded the vehicle's value by nearly 40%, and no shop in Atlanta would recommend putting that kind of money into a car with its mileage. Mason thanked him, hung up, and called a rideshare for Paige. His daughter climbed out of the passenger seat, carrying a violin case almost as big as she was. Her hair pulled into the kind of braid she had taught herself, because Mason's hands, as she had once told him with considerable specificity, were designed for keyboards rather than hair. She was 11 years old and carried herself like someone who had decided early that worrying was optional. She paused on the sidewalk and looked back at him with the expression she reserved for moments when she knew something was wrong but had chosen not to push. He told her the car needed a break. Paige told him she had a recital that evening, the spring showcase, the one she had practiced for 11 weeks, and asked, without accusation, whether he would make it this time. Mason told her he would be there. He said he was going to get a different car today and drive it straight to the auditorium. She adjusted the violin case on her shoulder and walked toward the front doors without looking back, which was either trust or 11-year-old discipline, and Mason was not entirely sure which one was harder to carry. He had $7,800 in a secondary checking account, the one he kept separate from his business finances as a matter of personal discipline, but his primary account was under a 24-hour hold after the bank flagged an unusual outbound transfer for security review. The timing was inconvenient in the precise way that only real life manages to arrange. He needed $8,000 for a 10-year-old used sedan listed on Whitmore Crown Motors' inventory page the previous evening, and he was $200 short through no condition that would persist past the following morning. The logical solution was a short-term loan of $200 against an application showing full employment, no fraud history, and a down payment representing 97.5% of the purchase price. Mason was also, on that same afternoon, the person responsible for finalizing which vendor would supply 120 fleet vehicles to his company under a budget of $18 million. But this was a business matter and entirely separate from buying a used car, and he had no intention of mixing the two. He arrived at Whitmore Crown Motors early, still in his work jacket and boots, and did not announce any other reason for being there. Whitmore Crown occupied a quarter-mile stretch of the Peachtree Corridor in Midtown Atlanta, its showroom front wall made entirely of glass, its interior bright enough to make every vehicle on the floor look like a museum acquisition. A banner in brushed chrome letters across the reception area read, "Every customer is treated as a member of the Whitmore family." Mason read it, noted it, and approached the front desk. The receptionist looked at his jacket and directed him toward the secondary lot behind the service building, where the used inventory was parked. The sedan was a practical machine in reasonable condition. Mason walked around it twice, checked the tire wear, ran his fingers along the door seals, and opened the hood long enough to confirm no deferred maintenance had been hidden behind the listing price. There were minor cosmetic issues: a paint chip above the rear wheel well, a door handle that required more pressure than it should, but the core was sound. He found Lena Brooks at the finance desk inside the secondary building and explained what he needed. $7,800 applied toward the $8,000 price, with a $200 bridge loan covering the gap until the bank hold cleared the following morning. Lena listened, opened the intake form, and began processing without visible hesitation. She had been in automotive finance long enough to understand that a $200 loan with near full down payment represented negligible risk by any rational measure. She asked for identification, proof of income, and banking records. Mason provided all three without being asked twice. When the credit check returned, her expression shifted slightly, not dramatically, but in the way of someone who has hit an obstacle she was not expecting and is already calculating whether it was surmountable. Mason's score sat below the dealership's standard threshold, reduced by a medical debt incorrectly processed by an insurance company following his wife's hospitalization, a disputed item under formal review that Mason explained clearly and that Lena confirmed matched a pattern she had seen before. She was preparing to escalate the file for a manual exception review, a process fully within her authority for amounts under $500, when Grant Halstead walked through the door. Grant was 48, dressed in a suit that cost more than most of the used inventory outside, and possessed the particular confidence that comes from years of being rewarded for knowing which customers were worth his time. He looked at the screen, looked at the loan amount, and asked Lena, without lowering his voice, why she was spending company time on a $200 approval when there were accounts with real numbers waiting upstairs. He looked at Mason's boots, then at the phone on the counter, with a crack running diagonally across the lower screen, and said, as though reciting arithmetic, that the cost of mailing a single late payment notice would exceed whatever interest the dealership could earn on this loan. Mason asked, without raising his voice, that the application be evaluated on its documented merits rather than on his appearance. Grant responded that the documented merits were exactly the issue, that below-threshold credit profiles and $200 financing needs were not the client mix Whitmore Crown was built to serve. He gestured toward the sedan visible through the window and told a lot attendant to move it back to general inventory, a directive delivered loud enough that 3 other customers in the adjacent area registered it as deliberate. Lena started to speak. Grant raised one hand in her direction without turning to look at her. Mason did not react visibly. He asked to speak with whoever held final authority over credit decisions. Grant smiled and said the CEO was on the premises, had never once come downstairs for a $200 loan, and would not be starting today. Arden Whitmore was 40 years old, and the third-generation heir to an automotive empire her grandfather had built from a single used car lot in Charlotte. She had spent the morning in a strategy session about the Northline Response Logistics fleet contract, $18 million that her team had identified as the most significant institutional deal the company had pursued in 4 years. And she was crossing the main showroom toward the service elevator when she became aware of a situation developing near the secondary entrance. Grant intercepted her with a summary. A walk-in with a subprime credit profile was pushing back on a declined application and refusing to disengage. The loan amount was $200. Arden walked to the secondary building, took one look at Mason Reed, the jacket, the work boots, the expression of a person who had decided to remain patient beyond the point where patience was comfortable, and reached a conclusion without asking him a single question about his circumstances. She had been making rapid assessments of people her entire professional life, and this one read to her as entirely clear. She did not ask about the bank hold. She did not ask about the insurance dispute attached to the credit report. She asked Grant, within Mason's hearing, whether the paperwork was in order to close the application. Mason spoke before Grant could answer. He explained, with measured precision, that he had paid $7,800 toward an $8,000 vehicle, that the remaining balance was unavailable for less than 24 hours due to a bank security review, and that he was requesting a bridge loan on the most conservative terms the dealership offered. Arden responded that Whitmore Crown was not a charitable institution. She said it evenly, as though she were citing a policy she had always found self-evident. She added, loud enough that a couple near the display floor could hear it, that someone unable to arrange $200 in preparation for an $8,000 purchase might want to think carefully about whether they were prepared for the ongoing costs of vehicle ownership. Mason looked at her for a moment. He asked whether she typically formed assessments of customers before finishing their files. Arden said she had been running this company long enough to recognize when a conversation was going to arrive at one conclusion, regardless of how many pages of documentation were generated along the way. She picked up the folder, uncapped a pen, and stamped the application with the word "Denied" in red ink. Grant set the folder on the edge of the counter where it was visible to everyone nearby. Arden then offered Mason 3 alternatives: a lower-priced vehicle, a return visit when his credit profile had improved, or a cosigner whose financial standing met the dealership's requirements. Mason did not accept any of them. Instead, he asked a question that Arden registered as strange, but not interesting enough to investigate. He asked whether the way Whitmore Crown handled customers in the secondary lot was representative of how they would treat the drivers, technicians, and employees who would be operating any vehicles purchased through a corporate fleet account. Arden heard this as a moral argument from someone who had run out of factual ones. She told Grant to resolve the situation before the investor group arrived for the afternoon walkthrough. Then she walked back toward the elevator. Mason watched her go and said nothing more. He asked for his personal documents to be returned. Grant told him the finance department required copies for their records, which was not accurate, and which Lena knew was not accurate and did not correct, because she had spent 11 weeks calculating what she could afford to say out loud. Mason did not argue. He asked for written confirmation that the application had been formally denied, received a standard denial form, checked the timestamp against his phone, folded the form, and placed it in his jacket pocket. Then he stayed in the building. He walked the primary showroom slowly, watching the room with the attentiveness of someone conducting a professional evaluation rather than browsing for a car. He watched a floor associate redirect a man in a delivery uniform away from the test drive sign-up to a waiting area where nobody came to assist him. He watched an older couple nod through a warranty pitch that did not mention the availability of identical coverage from third-party providers at roughly half the price. He watched a man arrive by hired car and receive a glass of water before he had reached the entrance, then be escorted directly to the private consultation suite on the upper level. None of it was surprising, but seen now, in the context of the red stamp on his file, it assembled into a pattern that told him something concrete about the company he had almost selected as a partner. He sent Victor Ashford a message: "Hold the fleet evaluation meeting." Victor called back within 4 minutes. Mason told him he was conducting a final check before proceeding and would have a recommendation by afternoon. Victor, who had known Mason for 19 years and had long since stopped asking follow-up questions when he used that particular tone, said he would redirect the team to standby. Grant noticed Mason moving through the showroom and made the decision. The kind of decision that looks like risk management but is actually self-protection, to misread the situation in the direction most convenient to him. He told Dean Carver, the security chief and a former police officer, that a customer might be photographing internal displays in violation of trade policy. Dean arrived, looked at what Mason actually had in his hand. A cracked screen phone held at his side, locked, and asked Mason in a flat and careful voice whether he needed anything. Mason handed him the denial form and his identification, and asked whether there was any reason a person reviewing vehicles from the primary showroom floor was required to leave. Dean took his time reading the denial form. He was a man who had spent more than 2 decades in situations where a wrong read produced consequences that were difficult to walk back, and the habit of reading carefully had not left him. He looked at the paperwork. He looked at Grant. He asked Grant, without any particular inflection, whether there had been a documented incident involving this individual. Grant said the customer was creating a disturbance and making staff uncomfortable. Dean said he had not observed either of those things. He told Mason he was welcome to remain as long as he was not interfering with operations, and that the exit was behind him if he was ready. He did not use his hands. While Grant's attention was on the exchange, Lena moved to the finance office workstation and created a backup of every document associated with Mason's visit: the credit application, the denial form with its timestamp, and a separate folder of internal fleet pricing records she had been accumulating for 11 weeks because numbers she could not reconcile kept appearing in contract files, and she had not yet decided what to do about them. She saved the backup to an external location before she closed the windows. When Mason finally walked toward the exit, Arden was crossing the lobby with 3 visitors in tailored clothing. She said, audibly, that maintaining brand integrity sometimes required difficult decisions about risk profiles, and that protecting the dealership's reputation was a non-negotiable operating principle. Mason paused at the door and turned back. He asked whether she genuinely believed that $200 was the largest risk Whitmore Crown was currently facing. Arden said she was compensated to understand risk at a level that would require him years to reach. Mason nodded, said nothing more, opened the Holloway Motor Alliance location on his phone, and transferred his afternoon meeting away from Whitmore Crown's main building. Then he told Lena, quietly, to delete nothing. Holloway Motor Alliance was 20 minutes south and looked like it had been built without the involvement of anyone whose primary job was managing impressions. The showroom floor was organized and well lit, and when Mason walked in wearing the same work jacket and carrying nothing but his phone, a floor associate named Ryan approached him within 30 seconds and asked, without looking him over first, whether he was shopping for something personal or something for a business. Mason said personal first. Ryan said that made sense. When Mason explained the bank hold and the $200 gap, Ryan brought in the floor manager, Claire, who reviewed Mason's employment documentation in the finance office and offered him 2 options: hold the vehicle until the following morning, or process a short-term credit authorization secured against his verified income, which required 20 minutes and could be completed today. Mason chose the second option. He was in the car before noon, and the transaction had involved no raised voices, no commentary on his appearance, and no request that he recalibrate his expectations. This mattered in a way that had nothing to do with the $200. Victor Ashford arrived at Holloway at 12:45, with 4 members of the Northline operations team and a senior logistics analyst from their regional deployment division. Victor walked across the showroom floor and reached Mason with the easy stride of a man who had made that particular walk toward the person who makes the final call many times before. He shook Mason's hand and asked if he was ready to look at trucks. Mason said he had already seen one thing today that told him clearly where the trucks should not come from. Victor did not ask for clarification. The Northline fleet requirement covered 120 vehicles across 3 categories: 64 command SUVs configured for mobile operations management, 36 support trucks with specialized cargo capacity, and 20 response vehicles for disaster deployment in areas where standard commercial equipment was inadequate. The combined purchase budget, approved by the Northline board in the previous quarter's capital planning cycle, was $18 million. Victor presented this number to the Holloway leadership team in a conference room that had unremarkable coffee offered to everyone in the room, regardless of their title. Mason sat at one end of the table and said very little. He asked 3 questions about maintenance contracts and one about parts availability in Gulf Coast markets, which revealed more about what he was planning to do with these vehicles than any presentation slide could have. While this meeting was in progress, Arden Whitmore was in her office reviewing the final draft of the Northline fleet proposal her team had prepared for the afternoon evaluation. The executive summary listed the primary contact as M. Reed, COO. Grant had told her weeks ago that this was almost certainly a placeholder, a legal or financial director who would formalize whatever recommendation Victor Ashford put in front of him, since Ashford was the recognized public face of Northline and the name everyone in Atlanta's institutional business sector associated with the company's decisions. Arden had accepted this interpretation without looking any further than the initials and the title, because it was convenient and because she had not been given a reason to look harder. When her assistant informed her that Northline had confirmed a location change and that the fleet evaluation was proceeding at Holloway Motor Alliance, Arden felt the particular anger that arrives when a competitor appears to be winning through access rather than merit. She called Grant, who said he would handle it. Her father, Conrad, reached her 3 minutes later and asked, in the direct and undecorated way of a man who had built a regional dealership into a national chain, why the largest institutional opportunity of the quarter had just walked into a competing building. Arden did not have a satisfying answer. Lena, at that moment, was staring at a fully printed credit application with the applicant field displaying Mason Everett Reed, Chief Operating Officer, Northline Response Logistics. She picked up her phone and walked quickly toward the stairs. Grant was at the top of the stairs when Lena reached the upper floor, and he moved to intercept her with the smooth efficiency of someone who had spent years managing which information reached Arden's desk, and which was rerouted through him first. He took the folder from Lena's hand before she could extend it toward Arden, looked at the application, and did not change his expression in any way detectable from more than 2 feet away. He told her to return to the secondary office and that he would deliver any relevant updates to Ms. Whitmore directly. Lena looked at Arden, who was standing by the window with her back partially turned, and made a decision that had been building for 11 weeks. She walked around Grant and placed a second copy of the application on the desk in front of Arden. Arden looked at the name at the top of the page, at the title printed below it, at the letter of intent attached behind the credit application, carrying the Northline letterhead and the $18 million figure in the contract value field. She stood still for several seconds, in the particular stillness of someone whose understanding of the last 4 hours is reorganizing itself around a single new fact. She went back through the conversation in the secondary lot. The jacket, the work boots, the question Mason had asked about fleet vehicles and the people who would operate them, and heard every word differently the second time. Grant said, quickly, and with the confidence of someone who had recovered from worse situations, that Mason Reed had concealed his professional identity to manufacture a trap, and that any reasonable person would have responded exactly as they had given the information available in that room. Lena said Mason had presented his legal name on every document, provided accurate employment information, and had not misrepresented a single fact in the application. Grant told her that not every opinion at the assistant level was relevant to a conversation at this level. Conrad Whitmore arrived at the dealership 40 minutes after his phone call with Arden, 69 years old, silver-haired, unhurried in the way of someone who had long ago decided that speed was less useful than clarity. He told Arden, in the upper-level conference room, that Northline had communicated to him personally during preliminary discussions that their evaluation process would include an unannounced visit from a senior operations leader to assess the retail experience without advance notice. He had mentioned this to Arden 3 weeks earlier in a different context and had assumed she passed the information to her team. She had not, because she had filed it under general business philosophy rather than specific operational procedure. Conrad did not characterize this as an excusable error. He said it was the kind of error that had already collected its cost, and the question was whether it was going to collect more. Arden drove to Holloway with Grant and 2 operations team members. Mason was visible through the front glass, standing near a row of support trucks with a clipboard. Arden walked in, announced herself formally, and waited. Mason finished a sentence with his logistics analyst, made a note, and turned. When Arden asked for a private conversation, Mason said that what had happened in the secondary lot had not been private. There had been staff present, customers within earshot, and a security chief summoned by name, and he saw no reason to make the response more confidential than the original event. Arden presented the arguments that felt true to her in the moment. Her staff had worked from the information in front of them. The credit system had triggered a legitimate flag, and the outcome, while regrettable, was procedurally defensible. Mason asked her, without anger, whether she would have driven to this building today if the number on the contract were $200 instead of $18 million. Arden did not answer. Grant offered, from behind her left shoulder, to provide the original sedan to Mason at no cost, and to apply a discount to any fleet agreement Northline wished to revisit. Mason told Grant that the problem had never been the price of the car. The Holloway team presented their fleet proposal in a conference room that fit everyone comfortably and had a whiteboard with actual information written on it. The vehicle specifications matched Northline's operational requirements across all 3 categories, with minor adjustments needed in the Command SUV communications package and the warranty coverage for the disaster response investments. Mason outlined 4 conditions for finalizing the contract: an upgraded emergency communications system installed at no additional cost in all 64 Command vehicles, an extended warranty structure covering both labor and parts through the first 5 years, a guaranteed parts availability program across the 12 most commonly deployed disaster regions, and a financing pathway for individual Northline employees who wish to purchase a vehicle through the dealership using employment verification as credit support. Barrett, the Holloway operations director, said the first 3 were implementable within the existing budget, and that the 4th had already been piloted with 2 other institutional clients and could be extended. The price remained at $18 million. Victor confirmed for the record that the Northline board had authorized the full budget and that the escrow mechanism was ready to activate. Mason placed a call to the Treasury function, provided an authorization code, and asked them to prepare the wire transfer documentation. Arden stood near the conference room doorway. Grant tried one final time to introduce the variable of price, suggesting that Whitmore Crown could undercut the Holloway proposal by a meaningful margin. Mason said that Northline did not select fleet partners on price alone, that the vehicles in this contract would be operated by drivers working in evacuation zones, by technicians maintaining equipment in disaster conditions, by employees whose credit histories might include unpaid medical bills from family members who had been sick. He said that a company unwilling to evaluate a $200 loan without contempt was not a company he could trust with any of those people's needs. He said it without drama and without looking at Arden while saying it. The contract was signed. Mason entered the authorization code. The system processed for 4 seconds. 4 seconds of complete quiet in the room, and then the confirmation appeared on the shared screen. $18 million, escrow funded. Through the conference room windows, in the adjacent lot, the first vehicles in what would become the Northline fleet were receiving temporary identification tags from a Holloway logistics team that had been on standby since morning. Arden looked at the screen. She looked at the same hands that had placed $7,800 on her dealership's finance counter 3 hours earlier. Grant was speaking, but nobody in the room was listening. He was explaining, to the general air of the space, that this outcome resulted from incomplete information cascading through normal operational process, and that the narrative forming around the event was fundamentally unfair to a company with 40 years of Atlanta market service. Mason put the authorization sheet into his briefcase and turned to look at Grant for the first time since Arden's arrival. He said Lena Brooks was the only person at Whitmore Crown today who had actually attempted to read the file. He said everyone else had looked at him and decided they already knew what the file said. Grant stopped speaking. Shortly after, Lena reached Mason by phone. She told him she had documentation that went well beyond that afternoon, that the pricing irregularities she had been observing in fleet contract files and warranty sales practices had produced records she had preserved because she did not know what to do with them and was afraid of what doing something would cost her. Mason told her to bring them to Conrad Whitmore in the morning and to bring a copy to the company's independent auditors as well. He said that holding on to those records rather than deleting them was the right thing, even when it had not been the easy thing. Lena's documentation filled 43 pages when printed, but its weight lived less in the paper than in what the numbers revealed when read in sequence, rather than in isolation. Grant Halstead had been inflating parts costs in institutional fleet contracts for 7 quarters, inserting consulting line items that corresponded to no deliverable service, applying extended warranty packages to buyers who had not been told they were optional, and charging administrative processing fees to credit applicants who had been denied and whose files had never been formally closed in the system. The independent auditors concluded that if the Northline contract had proceeded through Whitmore Crown under Grant's supervision, the unauthorized markup embedded in the contract structure would have yielded him approximately $900,000 in undisclosed personal compensation through a subsidiary supply arrangement established under a family member's name. Arden learned about the subsidiary on a Tuesday morning in her father's office. She sat still for longer than the silence required and then said, with precision, that she had never been told. Conrad said that was true. He also said that she had consistently measured her regional directors by revenue growth and deal volume, that she had not built auditing protocols that would have surfaced a pattern like this within its first 2 quarters, and that the metrics she had rewarded were the metrics Grant had learned to manipulate. He said this without anger, as a man who had built enough things to understand that a company eventually becomes a reflection of what it decides to count. Arden sat with that observation for a while before she responded. She said she had reviewed Grant's regional numbers every quarter and had been satisfied with what she saw. Conrad said that was the point. She had reviewed his numbers and not the conditions those numbers were built on, and the difference between those two things was the distance between a thriving business and a liability. Arden did not dispute any of it. When Grant was confronted by the board in a formal session 2 days later, he responded that the company had always prioritized results over process, and that the results he had delivered were why nobody had looked closely at the process. He said the word performance 4 times in 8 minutes. He did not say the word wrong once. Mason returned to Whitmore Crown at Conrad's request to provide an account of events in the secondary lot. He sat at a conference table with Dean Carver on one side and a board member and auditor on the other. Dean confirmed, in the precise and measured manner of someone with court experience, that Mason had not behaved in a disruptive or threatening way, that the removal request had been initiated by Grant without documented justification, and that Mason's personal documents had been retained beyond the legal window permitted for denied applicants. The auditor noted that this created an additional liability exposure. Grant's corporate credentials were suspended before the end of the day, and his personal devices were requested and, after a moment of visible calculation, surrendered. Arden asked, in the same session, whether the investigation could be managed internally to limit external exposure. Mason said the customers who had been charged incorrect fees had a right to know what had happened to their money, and that internal management of a public harm was a different thing from private accountability. Conrad said he agreed with Mason. A compliance review was authorized across all 12 Whitmore Crown retail locations. Arden announced that she was voluntarily stepping back from operational oversight of the retail division until the audit was complete, transferring authority to an independent compliance officer appointed by the board. This was not required of her, and she offered it without being asked, which Conrad noted without commenting on directly. Mason said before he left that the difference between a luxury experience and a dignified one was not the quality of the lighting in the showroom or the price of the vehicles on the floor. It was whether the company treated people well because they were powerful or because they were people. Arden said nothing. She looked at the table for a long moment, then looked up. Arden called a full staff meeting at the flagship location on a Thursday morning before the building was open to the public. She stood without notes. She said she had looked at Mason Reed's jacket and concluded, before reading a single line of his application, that he did not belong in her dealership. She said she had used her authority not to investigate, not to verify, but to stamp a folder closed and make sure everyone nearby could see the color of the ink. She said she had arrived at the conclusion that a $200 loan request was wrong before she had arrived at the conclusion that a person standing in front of her was owed the same professional courtesy she extended without hesitation to anyone who arrived by a certain kind of car. She apologized to Lena Brooks for the years of information Lena had tried to surface through legitimate channels and been discouraged from bringing forward. She apologized to Dean Carver for establishing a culture in which the security department could be used as a tool to manage customer dissatisfaction rather than address its cause. She told the assembled staff that the accountability for what Grant had done in the contracts was Grant's, but the culture in which his methods had gone unexamined for 7 quarters was hers. Then she called Mason Reed on speakerphone in front of the room. Mason listened. When she finished, he did not say it was all right. He said a formal apology was a beginning and not an ending, and that its sincerity would be measured by what the people in that room did the next time a customer arrived in a worn jacket with a file that deserved to be read. He said this without bitterness, with the evenness of someone who had decided that what mattered was not what had been done to him, but what would be done differently going forward. Mason outlined the conditions he considered necessary for Whitmore Crown to be eligible for future Northline procurement consideration. The company would need to complete full restitution to every customer charged unauthorized fees, a figure the audit placed at just over $300,000 across all locations. The audit results would be made public in a format accessible to affected customers, rather than filed in regulatory archives no individual would ever locate. A formal whistleblower protection policy would be established and reviewed annually by the independent compliance officer. The credit evaluation process would be rebuilt to allow manual review exceptions for documented temporary holds and medical debts disputes, with documentation requirements applying equally at all income levels. Conrad Whitmore announced separately that he was directing his personal executive bonus for the current fiscal year, approximately $400,000, into the Customer Restitution Fund. The board voted the same day to transfer Grant's case to the State Financial Crimes Division. Mason did not reverse the Northline contract with Holloway. He told Victor, when Victor suggested splitting the order, that all commitment signed was a commitment kept. He told Arden directly that Holloway had earned the agreement under the same conditions Whitmore Crown had been offered and had chosen to treat differently. What he offered Whitmore Crown was not a second chance on the fleet. He was clear that the fleet was settled. but an invitation to bid on a maintenance and service agreement covering 12 of the Northline vehicles deployed in the southeast corridor. It was a small contract, it was an honest one, and it would be evaluated on the same terms as every other submission, with no weight given to the Whitmore name and no penalty applied for what had happened in the secondary lot. Mason parked the sedan in the school lot with 11 minutes to spare. He sat in the car for 2 of those minutes, long enough to notice that the engine idled evenly, that the heat worked without complaint, and that the radio found a station without searching. It was a plain and functional machine, and he found this satisfying in a way that was easy to feel and difficult to explain. He locked the car, crossed the parking lot, and found his seat 3 rows from the front, where Paige had told him to sit, on the grounds that the acoustics were better there, and that she could see him from the stage without looking too far to the left. Paige walked out with her group and found him immediately. She did not perform any visible emotion, which was consistent with who she was, but she held eye contact with him for a moment longer than she did with any other fixed point in the room before returning her attention to her music stand. She played well, and Mason watched his daughter stand on a school stage with a violin under her chin and deliver 11 weeks of practice in 15 minutes, and the events of the day compressed quietly into their actual proportions. In the car afterward, when she asked how he had gotten a different car so fast, he told her that the day had reminded him that people could be judged fairly or unfairly, and that the only thing worth controlling was which kind of person you were. Paige said that sounded like something a teacher would put on a poster. Mason said that was probably true. She told him the new car smelled like someone else's life, and that she hoped it would start smelling like theirs soon. He told her it would. He told her most things did, if you gave them enough time and didn't treat them like they were less than they were. 6 months later, the picture was legible in the way that single days rarely allow. Holloway completed delivery of all 120 fleet vehicles on schedule and within the approved budget. The command SUVs were deployed to regional emergency operations centers across Georgia, Louisiana, and Tennessee. The employee financing program Mason had required processed its first 30 applications without a single denial based on appearance or unsupported assumption. At Whitmore Crown, the restitution payments went out. Lena Brooks was appointed Director of Retail Compliance with a staff of 3 and a direct reporting line to the board rather than to regional management. The public audit summary was posted to the company website and mailed to affected customers in plain language that explained what had happened and how to claim their money back. Arden returned to the CEO role after the board confirmed the structural reforms had been implemented, and she returned to it differently than she had left it, more deliberate, more present in the parts of the business she had previously considered below her altitude. She came to the Northline Operations Center on a Tuesday, without staff or advance announcement, carrying a folder with a bid for the maintenance contract. She waited in the reception area for 20 minutes before Mason's assistant showed her in. Whitmore competed on equal footing with 3 other vendors and won a pilot service agreement 3 weeks later on the basis of pricing transparency, improved credit policy, and measurably better service delivery. Before Arden left the operations center that Tuesday, she looked through the ground floor window at the parking lot and noticed the sedan in a visitor space, the same one with the small paint chip above the rear wheel well. She asked Mason why he still drove it when his company ran a fleet he could access at any time. He said the fleet belonged to Northline. He said the sedan was his. He said the thing that had mattered most on the day he bought it was not the car at all. It was the seat in the 3rd row of the auditorium and the 11 minutes he had managed to keep. Arden Whitmore had once believed that a person unable to borrow $200 had no place in her showroom. Mason Reed had shown her something simpler and more durable, that a small account does not make a small person, and $18 million does not make a great company out of one that has not learned to respect the person standing in front of it.